Welcome back. Let's talk about Apple and shares of Apple. Many people who watched the Worldwide Developers Conference yesterday were less than fully impressed by the company's announcement on artificial intelligence, and the company is perceived as a major target of tariffs, or certainly that tariffs remain a major headwind for Apple. Joining us now is Tom Forte, Senior Consumer Internet Analyst at Maxim Group. Tom, thanks a lot for joining us. You've said in some very recent commentary yesterday or today that trade talks between the U.S. and China are the big story for this company, much more so than the Worldwide Developers Conference. Let's get to the trade situation in a minute. First of all, tell us why you are among those who are less than blown away by what the company announced on artificial intelligence yesterday at the Worldwide Developers Conference.
Sure. So thanks for having me on, Paul. As a longtime follower of Apple, I don't think I've ever left a keynote super excited about a movie. So in this case, Formula One with Brad Pitt. That was probably the most exciting thing that came out of the keynote. I do think that the liquid glass is beautiful. So I think they've nailed the design for the changes they've made to their operating systems. But that said, they basically indicated that the much needed AI-infused upgrade for Siri is yet to come. Stay tuned for later this year. Now, they made some modest Apple Intelligence related announcements, giving you the ability for translation, giving you increased ability to show what's on your phone and then use artificial intelligence for search. But it was somewhat of a disappointing keynote.
Just briefly describe what liquid glass is. This is a new appearance under the new operating system on Apple devices, correct?
Yeah, so think of it as the translucency of glass, just a design theme that's inspired by liquid glass. So beautiful, soft edges. I don't know how, I'm not doing it justice.
Okay, let's move on to the issue that you think is much more material to the shares and to investors, and that's the state of trade talks between the U.S. and China.
So absolutely. So they could have had dead air for the keynote, and then coming out of London, there may have been some sort of trade agreement between the U.S. government and the Chinese government, and the stock would do incredibly well. So I think that when you look at Apple right now, the challenge is that $900 million that they've marked for incremental tariff-related costs for the June quarter and kind of what that may look like on a go-forward basis. So I think that the tariff talks the trade talks in London are much more significant right now than anything coming out of the developer conference for Apple.
You've said in the recent past that on tariffs, we believe Apple will mitigate the effect of tariffs by working with suppliers to bear some of the costs and raising prices to consumers. Tell us more about what you expect Apple to do in the face of tariffs.
Yeah, so I do think that the good news for Apple is they sell premium products. In the U.S. in particular, you're seeing a high level of subsidization going on at the wireless carrier level. So I do think that they can offset some of that pressure from tariffs by increasing price. They work very closely with their suppliers. They're essentially employing on a short-term basis assemble it in China and sell it for the rest of the world, assemble it in Vietnam and India and sell it to the U.S. Strategy. So President Trump doesn't seem to be happy with that. But I think that what President Trump is looking for is an even greater investment commitment from Apple beyond the $500 billion. And then it isn't clear to me whether or not they'll really ever make an iPhone in the US. Were they to do so, though, I think they'd have to mirror what Tesla does and have a high level of automation to manage labor costs, to have the cost to be competitive with those assembled other parts of the globe.
Okay, what is your rating on the stock and what is your target price on the stock and why?
Neutral rating, $201 US. I think that right now there's a lot of uncertainty and it's hard to expect investors to put a 30-time multiple on a PE basis when the earnings are in question. And so I think that's in essence why we have a hold rating on the stock.